This is Real Estate Underground.
Greetings and salutations, Real Estate Undergrounders. It's Ed Matthews with the Real Estate Underground podcast. Thank you so much for joining us today. Today is an interesting conversation because this lady that I'm about to introduce is a professional capital raiser. She operates. And she is also someone who is an expert in underwriting and analyzing both markets, deals, sponsors, you name it. And so, Vessi Kapoulian, thank you so much for joining us today. You're with DBA Capital Group, and I'm grateful for your time and your expertise. Welcome.
Thank you so much, Ed. It's a pleasure to be here, and I look forward to our conversation.
Absolutely, absolutely. So where I found you is I listen. So I don't really watch a lot of TV, and I don't listen to the news because it makes me sad and angry, right? So I listen to podcasts, and one of the podcasts, actually several of the podcasts I listened to, you were a guest on, and you were absolutely brilliant. So I spent a better part of a month begging you to come on, and you graciously agreed, and so I'm grateful. But for those of us out there that haven't come across your story yet, you want to tell us kind of who you are, what you do, and how you got here?
Yes, I'm happy to share. I'm originally from Bulgaria, and so my journey started a while back behind the Iron Curtain. Although one could argue that it was also a good opportunity because at the time when people talked about investments, they really talked about hard assets. So the seed for real estate was planted a while back. Didn't come from a family of means, but my dream was to study in the US. So I studied hard, worked hard, earned a full scholarship, and that's what brought me here. From there on, I kind of followed, you could say, the traditional path of going to school, getting good grades, and quickly realized getting a corporate job, and quickly realized after a few clues along the way that I was climbing the wrong ladder, if you will. And the 2008 recession being one, my own employer going through a couple of restructures, and that really prompted me to take a step back and think, well, there is only so much you can control, but what can I control?
Right.
And decided to set up a small retirement nest egg by acquiring my first property out of state. And so happy I did that because that worked out beautifully, which prompted me to buy a couple more. And at that point of time, I think the light bulb went on as, wow, this is not just a small retirement nest egg and a way to diversify away from the stock market. It could be something bigger. And the desire to scale is really coupled with ability to leverage my background in analyzing deals, selecting markets, asset managing the portfolio, prompted me to look into multifamily. So I made that transition and looking to continue to grow and scale from here.
Excellent. So I'm curious about your choice of asset class. So you and I obviously share that, right? In that I'm a multifamily operator as well. And so what drew you to multi as opposed to, another asset class, single family, storage, whatever?
A couple of things. One is, as I briefly mentioned, is being able to leverage my experience. So I started in the single family space, actually in the residential. And even though that's a different asset class, there are some similarities, and at the end of the day, it's still in the residential space. So I could leverage the skill set and the knowledge. But secondly, is I was looking at different asset classes and their risk-adjusted returns. Multifamily emerged on the top. Being a little bit more risk-averse, I took that approach and decided to stay in my lane. And that's what inspired me to look into that.
Yeah, I was on a podcast yesterday, and the gentleman asked me a similar question, and I for me, it came down to Maslow's hierarchy of human needs, right? The bottom, the base of that is shelter, right? And other things, but shelter is one of them. And, the fact that they are, human beings require or prefer a roof over their head. And if you can provide a good product, then, you should be able to fill your buildings very quickly and serve those people and have them live there a really long time and pay rent over that time span, right? Makes a lot of sense to me as well.
Yes, absolutely. Yeah. It's very tangible, achievable, and you're you have the ability to do good while you're doing well, right? And by
Absolutely.
providing
Totally agree with that.
clean, safe environment, for residents.
Yeah, I was talking with a friend of mine who's trying to figure out, what exactly do you do for a living? And I said, I buy crappy apartment buildings from landlords who aren't very good at their jobs. And then we make them clean and safe, and then we make them beautiful. And hopefully the folks that live there a really long time, and we take good care of them, right? I mean, it's not an easy business, but it is straightforward, right?
Right. It's a win-win-win for the resident, the investors, and the operator.
Absolutely. Absolutely. And you get to lay your head down on the pillow at night knowing that you're doing right by those people, right?
Right.
Yeah, exactly. So in terms of, your business, one of the things I think is true is you have not left corporate America. Is that true?
That is correct. I'm still doing this in parallel while holding a W-2 job.
Wow. So do you not like sleeping, or is
Yes, it's still a side hustle for me. Eventually, I hope to be able to transition into this full time. But it takes time. Real estate is like a marathon. It's not something that brings quick riches overnight. So I need a little bit of a longer runway. One regret I have is not starting sooner, because again, these things do take time. But I'm in this for the long run and willing to put in the work. I really enjoy what I do. To me, this is not work. So evenings, weekends, early mornings, I just have fun and love the business.
Well, it's amazing when you find your passion and you can actually make money at it. It really doesn't, it may be a job, but it doesn't feel like one, right?
Exactly.
Yeah.
I mean, I wouldn't call it a hobby because there's a lot more work involved, but again, it doesn't feel like, right. Exactly.
Yeah. So, it's interesting. I followed a similar path, and it took me a better part of 7, almost 8 years for, our business here to turn from a side hustle to an actual operating business. And I mean, it was whole lot of fun. And I too wish, so I bought my first property when I was like 41, and that was about 12 years ago. And I wish I had started at 21.
Right. Yeah.
So
that's the one regret. So I would encourage folks, don't wait, don't sit on the sideline.
Well, it's the old axiom, the best time to buy real estate was 10 years ago. The next best time is right now.
Right. Yeah. Oh, I love this saying. It could not be, especially for real estate or anything in life, but it could not be more true. Yeah.
So I'd like to talk about, your expertise and what you enjoy doing within your business. So, obviously underwriting is a huge part of your business. So I would love to understand your process in terms of, let's start at the macro level. Let's start at a market, and then we can work down to a property. So how do you, when you're thinking about, okay, the market I'm in is kind of played out and it's time to search for another opportunity, what are some of the things that you look for in a market or a region that kind of pique your interest as an investor and an underwriter?
Yes, and I'm so glad that you started with the market, because it's very tempting, and many times people want to start with the deal. And yes, there are a lot of things you can do to a property, but you cannot uproot it and relocate it. So and the market is important, right? That's your tailwind during tough times, or some that will propel you further during good times. So I really resort to the fundamentals. And for me, these are the population growth, right? You need people moving to the area, which drives demand for housing or potentially new development opportunities. Secondly, job growth. Ultimately, you want paying tenants who can afford to live there. Jobs enhance income, so median household income growth is another factor that I look at. Job quality and job diversity. You don't want to be in a single employer or single industry town, because what happens if they leave, right? The consequences could be pretty dire. And quality of jobs also matters, because when you look at, say, high paying or export related jobs like technology or manufacturing, basically things that are income generating, versus maybe lower end warehouse jobs. I'm sure a certain company may be putting in a lot of warehouses during peak times, but those jobs could quickly disappear during tough times.
Yeah, they're one of the first tranches of employees to get laid off, right?
Laid off, exactly. So those are the fundamentals, and then it's drilling into the sub-market and looking at crime rates, poverty rates, again, median household income, rent to own, rent to income ratios, home values, and a whole lot of factors. But the first four that I mentioned is where I start with the funnel, if you will, before digging into the specific sub-market.
You know, one of the things you just said is interesting, and I want to drill into it a little bit, and that is around home values, right? You're buying apartment buildings, so you know those are not in above 5 units. It's a commercial property, and they there's not necessarily a direct relationship between the two types of property. So I'm curious, why home values? What does that tell you when you see those figures?
Absolutely. And there are a few things to consider, right? One is the price per home, single family home versus price per door, because ultimately then that leads to the decision, well, if it's cheaper to buy a home, most people will probably do that versus renting one. And of course, there are a few other considerations that go into that, like mortgage payment versus rent payment. So that's one. But secondly, when you look at home values and you see appreciation over time, that's also an indication of the underlying market, the residential market, potential demand. And so that's a good indicator that kind of tells you, are we going up, down, or neutral? And ultimately you make a decision along with the few other factors that I noted.
Indeed. So, you know, it's interesting because you know, I look at I've worked in the past and actually do now with Charles Dobbins, who's one of my mentors. And, you know, one of the things I got from him was, you know, you want to know everything that's going on in a market and a sub-market, right? And so one thing that I've incorporated into our underwriting process is, you know, we're looking at the city or the county's 10-year plan. I'm also subscribing to the local newspapers because I want to know, you know, what the business community is doing and what, you know, because that's a pretty quick, efficient way to tap into, you know, what the next 36 months look like. Because if a convention center is coming in or the mall is falling apart, you know, pretty good chance you're going to see that in the paper.
Absolutely. And you need to be aware, right? Because these are the events that also impact your business plan, right? Like one of my markets, for example, is Orlando, and one of the largest county within Orlando is Orange County. And earlier this week, there was final resolution to it, but almost for a year, right? There was the question of, will rent control be implemented? So you need to follow those news. And a lot of times people think, well, it's Florida. And yeah, ultimately it did not pass because it's illegal in Florida. But what if it did, right? And it wasn't in Florida specifically, right? It wasn't until late 70s when rent control was prohibited. So that's not something outside of the question. So you really need to follow those trends and events because that ultimately affects your business plan and how you navigate knowing that information. Absolutely.
Yeah, there was rent control provisions that were being considered here in Connecticut. I'm in Connecticut. You're obviously in Florida. I'm in Connecticut. Same thing. You know, people are looking at I think COVID is informing a lot of that, at least here in the Northeast. And so, you know, a lot of legislators are looking for ways to navigate, you know, when the next pandemic or health crisis or crisis in general happens, you know, what are the tools that they can put in their toolbox to manage? I pay very close attention to that because here in Connecticut, there was not only was there there was an eviction moratorium that actually just wrapped up a few months ago. And a lot of residents took that as, oh, I don't have to pay. Well, that's not what the governor said, but yeah, you do need to pay, right? And so, you know, obviously paying close attention to the local and state laws is really important. And in addition to the legislation that's potentially coming down in the future, right?
Absolutely.
Yeah. So in terms of underwriting, let's take down another level, right? When you're looking at properties, what are some of the things? What are the attributes? What are the financials, the returns? What are you looking for? For you and your investors.
So we focus on stable value add, class B, C plus properties, no heavy repositioning. We're staying in our lane and looking at more traditional or market rate multifamily. So not considering student housing or condos or assisted living facilities, anything of that sort. Ideally something newer, 1985, 1919 or newer property. And I would say those are the main characteristics. Just at this stage, looking to avoid higher risk or heavier lift kind of assets.
Yeah, and yeah, go ahead.
I was going to say the second part of the question, as far as returns, what we're looking at is ideally 15 to 20% IRR, 1.5 to 2 times equity multiple over a 5-year period, 3 to 7 year period, cash on cash anywhere from 7 to 10%. Those would be a few of the metrics that kind of shape our investment decisions.
Okay, excellent. And so, when something pops up in your radar, so where are you? You're looking in your backyard predominantly, right? In Florida, or do you hold?
Yeah, just to clarify, I'm actually based in Los Angeles. So
you are?
Florida is not my, yes. So I'm based in LA. I invest in Florida. And of course, I don't do this on my own. Multifamily is a team sport. So I have partners who are there in Florida as well. And we collaborate on those opportunities. Yeah.
All right. Well, I had it in my mind that you were a Floridian. So thank you for setting me straight.
No worries.
Yeah. So two very interesting markets, right? And being in Southern California versus Central Florida, two dramatically different markets. Do you ever look for properties closer to the West Coast, or are you predominantly focused in the Sun Belt?
Focus on the Sun Belt. That's where I started. I've always invested out of state because my investment goal was cash flow. Secondly, landlord friendly versus tenant friendly locations. And then the last factor is liquidity. To get properties to cash flow here in LA, you typically need to put a lot more money down, and properties are a lot more expensive. So my dollar goes way further in the Sun Belt. So that's what shaped my decision to look out of state.
Yeah, makes sense. And so, with the economy, kind of changing, and when inflation went through the roof and rates also, jumped up, I'm curious what your perspective is on the market, especially down in the Sun Belt there.
Yes, so we're going through very turbulent waters, but I believe long-term in the asset class, which is multifamily, I do think there will be great buying opportunities coming on the horizon. Unfortunately, due to some distress that some owners may experience and due to short-term debt that I got into that is floating rates, and we all know rates rose pretty rapidly, pretty much starting since March of last year, and we're probably due for another rate hike. Possibly at least one more. Will the Fed pause after? Maybe. A lot of it would depend on other economic indicators. I know they've been really focused on reining in inflation, and that is coming down, but not as fast as they would like it to be. So you can't really control what the Fed will do or what the macroeconomic events would be. So in those scenarios, I think it's important to focus on fundamentals, making sure you do your diligence upfront, you underwrite upfront with realistic, conservative assumptions, set adequate reserves aside, because unexpected things always happen during good times or bad times. So for me, it ultimately boils down to fundamentals and the things you can control. And again, in the long run, I do believe in this asset class, which is why, despite some of the uncertainties in the market, we're still continuing to look for properties, underwrite properties, and of course make offers only when the numbers make sense. So not going after any deal, but only the one that makes sense.
Right. Yeah, we make offers. As I think I'm sure you know that asking price is always a lagging indicator, right?
Mm-hmm.
And so the fact that the interest rates went from the low single digits now into the 7, 8, 9 plus, right, depending on the deal. People are there was a Moody's presentation on what the outlook looked like end of last year, I think, and they were saying, and I backed this up with I've researched this with local banks here in Connecticut, and it's about 23% of the adjustable rate mortgages, the bridge loans, that are not going to be refinanced because they got it at 3.5%, and now they can they can refi at 7.5%, and there's not enough meat on that bone to cash flow, right?
Right. Or they have to bring more capital, right, to bring the LTV to a point where it can cash flow appropriately. So unfortunately, some owners will be forced to sell. And beyond that too, rents are also moderating, right? They're not rising as rapidly. So I know we saw many deals that were bought at negative leverage over the past couple of years.
Yeah.
And the rapid rent growth in some markets, 20 to 30%, maybe offset some of that imbalance in the short run, but that's no longer there. So
yeah, I agree. Rents don't always go up in perpetuity, and neither does value, right?
Right. Exactly.
And so it's an interesting point you make, because when you're underwriting a property, being conservative and looking at historical norms, I've seen so many offering memorandums where everybody's assuming 7% rent increases year over year for the next 5 years, and that the cap rate is either going to stay exactly where it is, or it may even drop a few bips, and neither of those things are true, right? And so if you based a model on 3.5% interest rate, buying at a 4 cap, and you were hoping that rents would overcome that purchase, collar's getting tight right now, right?
Absolutely. Yes, absolutely.
And the thing is, historically, you look at mortgage rates over the last 50 plus years, we are right on the historical mean.
Yeah, the 5 to 6%
is normal.
Yeah, it's not abnormal. I think probably that's where we'll settle in the long run, which then you bring up a great point with cap rates, right? They have reversed and continuing to reverse in many markets. So are we going to settle at 6-7%? I don't know. And it's very market specific as well. It varies by market and sub-market. But those are things to take into consideration, because especially a thing like cap rate, it has a multiplier effect on the valuation. Right. And so I always encourage investors, look under the hood and peel the onion, because whatever numbers you put, that's the kind of output you're going to get. Don't fall in love with the returns presented to you. Right. Look under the hood and make sure you're comfortable with the underlying assumptions of the operator.
Absolutely. So you mentioned earlier that you have partners, and I assume over the course of time you've also had either coaches or mentors, formally or informally. And so I'm curious about how you gained your experience, and how you the mistakes you made, and how you overcame them. So I'm going to ask a question about advice. So how, what is the best advice you ever got? And I'm curious who gave it to you.
Yes, that's a great question. To me, it's be bold and take action. I got this from my uncle who passed away, but he said, if you squeeze a stone and turn it into water, and that's be persistent and consistent. Nothing is easy in life, right? Difficulties almost arise, and especially when you're an entrepreneur, there are always challenges, and you have two options. You can sit there, cry, lick your wounds, or you can get up, own the mistake or extract the learning from that experience and keep moving forward.
Absolutely.
So that's one thought that comes to mind as you brought up the question.
Yeah, no, that's really good. The fact is that wanting to grow, somebody once told me that the reason that being an entrepreneur hurts is because growth hurts, right? If you're not in pain in some way or shape or form, you're not thinking big enough, right? And so complacency is the enemy here, right?
Right.
Yeah.
Absolutely.
So, obviously being a leader within your company, I fundamentally believe that leaders are readers. And so, constantly people like you are out there trying to learn more. And, it used to be, I read, X amount of books a year. And now with podcasts and YouTube and audiobooks and regular books and all that, I'm curious, first off, how do you take in information? How do you sharpen your saw? And I'm also curious, who are you paying attention to these days? What are you reading and listening to?
Yes. So I like to consume multiple sources of information. Of course, books is one of them, like you mentioned, podcasts, meetups, connecting with fellow investors, conferences, of course, reading the news. Lately, I will say I've been following actually a few individuals, mostly due to my underlying desire to learn and study the markets even better and inform my own decisions versus solely relying on the messaging by the Fed and our government. So those few people Harry Dent, who wrote a number of books on market cycles, Ray Dalio, that they both look far back in history and really looking to understand what are the underlying factors, because history repeats itself, and for better or worse, we don't learn from our mistakes. And again, I'm naturally curious, always looking to learn and grow, and that kind of spiked my curiosity in learning more and devouring their content.
Yeah, staying curious is important, right? I mean, I'm at 53 and I tell people I still don't know what I want to do for a living, right? I mean, this is my passion. I'm loving this. I'm doing this, but there may be a day where I want to do something else. I don't know. We'll see.
You learn every day, and that's
every day.
Learn and grow.
Absolutely. So let me ask you, knowing what you know, if you had to start over, what would you do differently?
I know this may be a very common saying, but I really mean it. I really wish I had started earlier, and specifically for me, the vehicle to personal freedom, financial freedom, and living an impactful and meaningful life is real estate. That's not the only vehicle, but that's the vehicle for me. And I wish I had taken action earlier or started earlier, and probably figure out a way to get in the right circles, because the circles I was in were really following the more traditional path. And so my vision of success was defined by my environment at the time. So I really wish I had explored alternate resources and being able to see that there is a bigger world out there, and there are multiple ways you can make your dreams real.
Absolutely. So Vessi, I'm curious, when you are not working your day job and you are not investing in real estate, what do you do for fun? What do you like to do outside of work?
I like to spend time with my family, including my fur baby. And I also like running. At one point of time, I ran marathons and half marathons. Now I just jog and run for fun, several miles a week. But those are some of my hobbies.
Excellent. So tell me about your fur babies. Are you a cat person, dog person?
Yeah, it's a small Yorkie, and his name is Ricardo. Yes.
Okay. Dogs are the best. I was talking to my wife, which we have 2 golden retrievers, and I'm fairly convinced that they are way better than most humans, right? They're just unconditionally loving and fun and relaxing, and
They're incredibly smart. Yes.
Yeah,
Yeah, absolutely.
indeed. So Vessi, I've really enjoyed our conversation today. If people want to get to, reach out and contact you or get to know you, what's the best way to do that?
The easiest way to connect with me is through my site, www.dbacapitalgroup.com. D is in dream, B is in believe, A is in achieve. My phone number is there, email, direct link to my calendar, as well as a ton of free educational content, including my first digital book, The Busy Professional's Quick Guide to Investing in Multifamily, designed to educate and empower investors.
Excellent. Well, congratulations on the book. I know how hard it is to write one. So, and do basically 2 jobs at the same time and have a life on top of it. So you must sleep about 45 minutes a night. With respect.
Time flies when you're having.
Yeah, right. It's exactly. So Vessi Kapoulian of DBA Capital Group, thank you so much for your time today. It was really a pleasure to hear your story, and it's nice to finally connect in real life, so I don't have to just listen to you speaking to other podcasters. Now I get to call you friend. So, thank you very much.
I really enjoyed our conversation, and thank you so much for having me as a guest.
Absolutely. All right. Thanks.
Thank you.